Hello, investors. Welcome to the channel where I use technical analysis to find possible swing trades. Before beginning, I like to make it clear I'm not a financial advisor. Everything I say is for informational, educational, and entertainment purposes. Technical indicators are not accurate 100% of the time. Company fundamentals and macroeconomic factors can drive share price changes differently than we'd expect based on technical indicators. My goal is to bring these companies to your attention so you can decide for yourself whether or not they're good investments for you. So please, if you plan on investing, do your own due diligence before purchasing shares in any company or consult with a financial advisor. With that said, today we're taking a look at Alpine Income Proper, ticker symbol PINE. This is a micro-cap REIT with a market cap of $230 million. Based out of New York in the United States. They operate several dozen different triple net lease properties for high income and high credit rating businesses. Now, I'll mention before looking further that this is something of a different beast than I usually look at. But here we are on the annual chart, and you'll see that it is below, although it is not below all the moving averages at the moment. Share price is stuck between the 200 and the 50 and 20 moving averages. So it's kind of muddled in the middle there. But overall, if you take a look at where it is, you'll see that it is lower than it has been for probably 80% of the rest of the year. And if we scroll down, you can see the RSI is, again, kind of in the middle. Stochastics are actually towards the upper end, although they are, again, bouncing around. And the volume is a bit difficult to see because of this gigantic red candle that just throws off the proportions of everything else. But there did seem to be a slight increase in selling pressure lately, which has declined. And the MACD is falling, although it's been hugging the zero line for quite some time. It does seem to be on this uptrend that has lasted several months. So you might ask, with these middling technical indicators, why would I discuss this company? And we switch over to the financial section here, the fundamentals. We can take a look, and you'll see a bit of a different story. It's very low short interest, less than 1%. The debt to equity ratio shows it has less debt than 61% of other REITs. That's always a good sign. The PE ratio is lower than 90% of other REITs. The gross profit margin is greater than 92% of other REITs, which is impressive. And the operating margin is best in class, greater than 100% of other REITs. Now, if you look at the operating margin here, it listed as 103.68%, which seems like an impossibility, but we know that that's due to the accounting magic that all REITs use when they do their books. So even though this is probably something of an anomaly in the entirety of the business world, all REITs use the same type of accounting magic, so to speak. And compared to those who use this sort of thing, it comes out at the top. And if you look at the other numbers here on profitability, these are all impressive numbers. Gross margin, 87%. EBITDA, almost 75%. Net profit margin, 80%. This is a highly profitable REIT, any way you cut it. If we look over here at return on equity, it shows that it beats out 87% of other REITs. That's outstanding. The growth rate beats out 90% of other REITs. It has an outstanding dividend at 6.73%. And the payout ratio shows that it's quite secure, using only 43% of available funds. So all these fundamentals and the fact that when we look back here at the chart, the share price is relatively low, make me think that this could be a good time to buy into this company and let it revert back to the higher prices it's had recently. If we zoom out a bit onto the 5-year chart, you can see this plays out. And I'll point out that this is the furthest back the chart goes, back to late 2019. So here you have the fall for COVID, the share prices recovered, and it has basically traded sideways for most of the remainder of that time. However, right now, it is absolutely on the low end of that sideways channel. So if we presume that it's going to remain in this pretty tight range that it has held for the last 3 years or so, now would absolutely be a good time to buy into it. If you look over here on the 200-week moving average, it's well below that. So a reversion to the mean in this regard would certainly be profitable for anyone who purchased shares now. So I'm curious to see what anyone out there thinks of Alpine. Please let me know in the comments below. And if you got something out of this video, I'd really appreciate it if you'd hit the like button and subscribe to help out the channel. If you enjoy these brief overviews of companies that might be good swing trades, please leave a comment for the YouTube algorithm. Or if you prefer to tell me what I got wrong and how you disagree, you can leave those comments too. Or if you want me to take a look at a particular company using the indicators I present here, just mention it in the comments, and I'll try to get to it as soon as I can. That's all for today. Thanks for watching, and good luck with all your investments.